Welcome back to ESG Decoded. This is Amanda Hsieh, and today I have Christine Tomas, the head of business development at iSelect Fund. She joined the executive team in 2020 and brings more than 25 years of experience in global investments. She served as managing director and a trusted portfolio advisor at Goldman Sachs in London, New York previously. Also has been at JP Morgan Asset Management and Veribank Advisors. Christine's also bilingual in Spanish and English, and French and German as well, and earned her MBA from the MIT Sloan School of Management, and also has her BA from Harvard. So I'm so excited to have Christine on the podcast with me today to talk about impact investment and impact investing from iSelect's point of view. And a lot of times with impact investing, we immediately think climate change, which is one of the many issues we are dealing with. But I also wanted to have Christine on the podcast to help us think of some of the other sustainable development challenges that we are experiencing as a world and how investors are addressing those topics as well. So Christine, welcome so much. Thank you so much for making the time.
So thank you, Amanda, and to your team at ClimbCo. I'm very excited to be on the podcast and to talk about one of my absolute favorite topics, which is investing with impact. We think about impact investing, or we like to call it investing with impact. And we feel very strongly that investment opportunities in any sector that drives innovation and growth also it's not only unbelievably important for the world, and it solves so many of the world's problems, but it really can also meet the demand that many investors have at the moment to invest with purpose, right? And invest for positive change. I always think about it as so important to focus on industries where you're seeing some type of transformation, where incremental investment, particularly now, can help increase productivity and decrease inflation, which is a concern that's of the utmost importance, particularly at the moment. It's not a concern that the markets have had or investors have had for a very long time, but it's one that we have now. At iSelect Fund, we're a multi-stage venture capital firm. We're based in St. Louis, and we invest in some of the great industries that St. Louis has pioneered and innovated over the years. So ag tech, nutrition tech, and wellness technologies. We invest in companies that design technologies that are really transforming the supply chain in food, in nutrition broadly, and also in related wellness. When we think about the types of companies that we feel create the best investment opportunities for our investors, but also for anyone out there who is looking to, as we call it, invest with impact, we are particularly focused in 3 or 4 key areas. The first area is plant design and seed design, specifically those plants and seeds and ingredients that can increase the amount of nutrition and particularly protein in the products that the world eats. Now, the so-called protein gap has become a particularly acute problem for a couple of reasons. Number one, you have millions and millions of people in the U.S. who suffer from food-related illness and who drive, and the treatment for that illness really drives just an unsustainable increase in costs. It costs the United States almost $2 trillion a year to treat food-related illness. So clearly, better, more accessible, more affordable, and tasty, nutritious food is the answer. The second, source of this acute protein gap problem is the fact that you have global population increasing, as we all know, but about 3.3 billion people over the next 30 years will enter the middle class, and they will eat protein for the first time, or at least they'll have a more appropriate amount of protein in their diets. And that protein demand simply just cannot be met through animal protein. And another problem, of course, is that there is not enough arable land to feed this growing population full stop. So new strategies, new products, new technologies are needed in order to help preserve soil and crop health. And we invest in companies that not only design higher protein, high nutrition ingredients and inputs, they also design and develop soil and crop health biologic and sustainable technologies and products. And then finally, we invest in technologies that have really allowed large growing operations, and even small ones for that matter, to digitize and manage their operations in a much more profitable manner. That type of technology deployment just would not have been affordable 5 or even 10 years ago.
I think that's amazing, and it's interesting the global issues that we're dealing with, food insecurity and this protein gap. And I think many of us may have been aware of the growing population and how will we feed everyone with this changing climate, with changes to kind of water and precipitation around, as we're feeling in Texas and the Midwest and in our drought right now, and really high temps currently in middle of July. So it's really interesting to hear how about the innovation that's happening in this space to address these really long-term issues and I think what I didn't realize was, I've heard from other folks about that food is medicine. Food can be medicine. But it's something that I typically think of maybe outside of the U.S., that we have enough to eat here. We're commonly cited for being wasteful, but actually it's not like that everywhere in the U.S. And what I'm hearing is that it's different populations are having different problems. We shouldn't think of the U.S. as just all in the same umbrella.
Yes, I know, and I'm really glad, Amanda, that you raised that point, because we think about and talk a lot about food deserts. And, food deserts exist in urban areas. They exist just a couple blocks from me here in Upper Manhattan, where I live. Food deserts exist in rural areas where you have kind of plentiful farmland and plentiful crop production. And the issue really is that for millions of people in the United States, they simply don't have access to nutritious food at an affordable price that's tasty and enjoyable to eat. Millions of people in the US don't have a car. And if they had a car and could get to Walmart, they probably couldn't even afford Walmart. They shop at Dollar General, or maybe they shop at their local gas station. And what we think about is a key step in addressing the issue of poor nutrition in the US and the absolute spiraling cost of treating food-related illness is that you need to be able to make shelf-stable food that has high nutritional content, and it's also represents food products that people want to buy and people want to eat. And so you're absolutely right about the problems that the U.S. faces. The way I think about it, having now studied these areas for some time, is that the developed world, particularly the US, and the developing world, they both have a nutrition problem. They're just different problems. And we invest in companies that actually can solve both those problems. And I think for your listeners who care a lot about investing with impact, investing to make a difference, or it's different people phrase it different ways, is that if you want to have impact, invest in companies that are innovating and are developing new technologies to solve problems, to do something better, particularly when that product is food and is so important. Every single person on this planet needs to eat. I think we all sort of feel like every single person needs a smartphone, and that could well be the case, but first and foremost, they need to eat, and they need to eat in a nutritious manner.
Christine, can you give us some examples of their portfolio companies and kind of the solutions that they come up with?
Yes, I'd love to talk about our portfolio companies. So a couple of a kind of good examples from all three buckets that I discussed. The first, from the first bucket of ingredient design, better inputs, I would kind of mention a company called Bonumose. And what Bonumose has done is that they have developed a patented technology to extract a low-calorie, low-glycemic sugar from potato starch and other vegetables called tagatose and allulose. And these two low-calorie, low-glycemic sugars were identified decades ago. But the problem has been that there has really not been a good way to extract them from the fruits and vegetables in which they're found. And for that reason, you can usually find tagatose and allulose on Amazon. I say usually, it's a little bit difficult, but you can find it, and it's a product that diabetics have baked with for some time, but it costs $25 a pound.
Wow.
Yeah. So it's out of reach. Mm-hmm. And the reason that tagatose and allulose are so interesting is that they have really almost all of the properties of sucrose. They can be used in baking, in food manufacturing, in food preparation. I mean, I've seen piles of it, and it has all of the look and feel of sucrose. So Bonumose's technology can produce tagatose and allulose at a cost of about $2 a pound, which is roughly what organic sugar costs. Mm-hmm. Two of their major commercial partners and our two of our fellow equity investors in the company are Hershey's and American Sugar Refining, the parent company to Domino Sugar. So if you just think about a kind of almost one-for-one substitution of tagatose and allulose for sucrose in a Hershey's bar, that 250 calorie Hershey's bar becomes call it 100 calorie Hershey's bar or even less. And that's just a big jump. Another company that we always enjoy talking about is one of our soil and crop health companies. It's called Kula Bio, happens to be based in Cambridge, Massachusetts, and the technology was developed by actually veterans of the petrochemical industry. And this fertilizer is very innovative and important because it contains a nitrogen-fixing microbe, which means that it can be applied far fewer times than synthetic fertilizer. As synthetic fertilizer, unfortunately, the nitrogen component, doesn't last a very long time, and that's why you have to have repeated applications. You also have to, clear an entire field of labor when you're applying it. But given that this is a biologic product, and it does contain this nitrogen-fixing microbe, the fact that it can be applied far fewer times and it has much less impact to the labor on the field means that it is, it's better for the soil, it's better for the crop, and is much better for the farmer and the farmer's profitability. And then finally, I would mention a company called Centera, which is a company that has integrated software and hardware technology and analytics capabilities, the ability to process imaging from drones and from other sources. And not only can it perform all of the functions that you think about, an SAP or other traditional ERP type of system that large corporations have deployed for the past 35 years. But what it can also do is it can also help growers manage their supply chain logistics, and it can help them trace the organic sort of ensure the organic certification of their crops, which is so important for end producers. So we're finding more and more end producers like an Ambev in the beer industry or Pepsi in the snack industry wanting to be able to certify that their inputs are organic, and you can really only do that with good technology.
I've worked a lot in supply chain traceability before, so I can understand how digitalization would be so helpful and increase efficiency, but also transparency at the same time. Thank you for sharing. And I'll make sure to put links in the show notes to iSelect Fund, but also to the three companies you mentioned, so that any of our listeners want to check them out and learn more. They'll have an easy link, just one-click link to do that. with your experience in investing with impact, I just wanted to ask you a few questions, kind of do maybe some myth busting around impact investing or ESG investing, because I feel like every other week there is some article about this. And something I'd like to get your perspective on is, do we have to give up returns to make an impact? There's a commonly maybe an assumption that in order to invest with impact, to invest according to our values, we are going to give up returns. Is that a definite?
No, and it says, and I know you and I have talked about this before, Amanda, and it's another one of my favorite topics to discuss. I've worked in the investing markets my whole career, almost 25 years, and I would say that prospective investors, regardless of their experience level, have a view about what they want their portfolio to look like. And as an advisor to those investors, you have to make sure that they think about how they're going to feel in 10 years' time with the prospective return profile. Now, to invest with impact really largely means, if it's done purely in my view, it means investing in growth strategies, right? So if you really invest in any type of a growth strategy in the public or private markets, there's a very, very high chance that your investments can qualify in some shape or form as being impact investments, because companies that are growing are usually growing because they've developed a new technology, because they're innovating in their sectors. They're also helping through that innovation to bring down pricing in those sectors. When we think about, particularly my colleagues and I who are of my era, when we think about the way innovation in technology impacted pricing in the 80s and early 90s, yes, of all types of products, right? Hardware and software and telecom services and internet access. So whether that's healthcare, different areas of retail, different areas of logistics, usually if you're investing in some kind of growth strategy, private or public, you are going to be investing for impact. Now, it is very important, however, I think, for anyone who is investing to think about their broad portfolio. And you really need to have a diversified portfolio. You need to make sure that your asset allocation is appropriate for your level of risk tolerance, for other financial assets that you have and financial responsibilities that you have. And it's just very crucial to think about an impact investment in the context of your total portfolio. Because of actually innovations that the financial services industry has made, it is now private investing is now more accessible to individual investors. And I would still say that that type of private investing, which is what we do, which is where I personally think the most exciting investment opportunities are, that again is just that's for a piece of an overall broader diversified portfolio. So a long answer to your question is to say that no, you don't have to give up returns, but you do need to be smart. Think about where you're going to be when you need this money. And you don't want to be frustrated at yourself that you didn't have a diversified portfolio, because as we've seen in the past few years, developments in the world can come out of nowhere, and they can impact the markets and particularly an investment portfolio in a way that was just completely unexpected.
Thank you for that thoughtful answer. I think the other question I had, or maybe myth that I wanted to explore with you is, and this is something else that comes up in, I feel like, a newspaper article every week or other week, is, what is an ESG fund or what is an impact fund? And this is also, I think, connected to the SEC's, Security and Exchange Commission's fund name rules that came out a few months ago about trying to clarify all this. But can we trust funds with ESG funds or impact funds? What do you think about all that?
Well, and again, I've enjoyed the conversations that you and I have had in the past on this topic because it's one that I feel very strongly about. It's very important to do your diligence. These diversified funds, they're funds both in the private markets and in the public markets. They have very compelling stories to tell. And I would say that it's just important to fully understand what type of strategy you're investing in, what types of companies that you're investing in, what the liquidity profile is, because more and more public markets managers are offering up a private market solution to their investors who want, who are looking for kind of different avenues for investment growth. So I would just urge all potential investors in impact funds to make sure that they understand exactly what the fund manager's criteria is to select investments. Look at the portfolio. That's a matter for public funds, that's public record. And I would also make sure that for anyone investing in a private fund, that they be very comfortable with the liquidity terms and the ability to potentially continue to invest in those companies as they grow and raise more money.
Christine, thank you so much for being on our podcast. Hopefully that some of our listeners feel inspired and invigorated by the investments and the innovation that's happening. And again, I'll make sure that we link up all those websites in our show notes to make it easy for everyone to learn more. Have a good day. Thank you so much.
Thank you, Amanda. Bye-bye now.